Well, welcome everyone. I see new faces, which is very good. This is the Mayo Clinic Business Accelerator. We opened in March. It's an initiative of a joint effort of Mayo Clinic, Ready, and the city of Rochester. And we try to have a space where we can bring together entrepreneurs, companies, just a place where we can foster and create an innovative community. And as part of that, we thought that we don't have an angel group in town, and we wanted to see if there was someone who was interested in that. We brought David Russick. He's the founder of the Gopher Angels, a group in Minneapolis. I met him about a month ago, and I like what they do. So I told him, and he was willing to come down and present. So we had this event. And David Russick has a background he's a former businessman and entrepreneur himself. He's the founder and manager of the Gopher Angels. They have 50 members, I believe.
That's right.
And they're looking for more people in case you're interested. And they've done, I think, 7 to 8 investments, so he can tell you more about that. And without further ado, okay, floor is yours.
Thank you. Well, thanks for coming. I appreciate it. I'm just going to go through the presentation, but I don't want to put you to sleep, so we can keep it a little interactive. It's very intimate in here. If you have questions while I'm going through it, that's fine. That way, everybody stays awake. Where are we at here?
Just click next or intro.
Okay, so I'm just going to describe some general aspects of angel investing and investing in general. So the progression is you start with an entrepreneur, usually starts with family and friends, small dollar amounts, tens of thousands of dollars to help get their business off the ground and get started. And then what that generally leads in, if they succeed beyond that, then comes the angel investors. And we're looking at, again, maybe 50,000 up to between $1 million and $2 million, depending on the size of the angel group. And then you have funds versus a network. And this is critical because Gopher Angels is a network, and what that means is that each individual angel investor makes their own investment decisions. Whereas a fund, which is just as legitimate as far as the difference, but the fund then is generally you pool your money together and it's done, decisions are done by majority rule. Okay? So the difference between a network and a fund. Now, we've got, within angel investing, there's seed investing and early stage investing. And for definitions, the way we use it, seed investing, we generally see someone coming in with a business concept. They need, again, almost in the family and friends area, about 50,000 to maybe a couple $100,000. And the idea there on seed investing is to get your patent filed, to do a beta test, to maybe do some testing with customers, some very basic stuff. So you have your business plan, and now you're going to seed stage. All right, so the dollar amounts are relatively low for them to do this part of it. And then early stage can be anything from 150,000 up to, like I said, a couple $1 million. And here they've generally done their testing. Their patents have been applied for. Ideally, at least with our organization so far, they have some revenue, but we will look at pre-revenue, meaning they haven't gained any revenue, but generally they have a customer out there that has been testing their concept. So we can go to that customer and say, does this make sense? Are they providing a need for you? So that's early stage for us. And then venture capital, which I'm sure you're all familiar with though, is the very large dollars. These days, from what I hear, venture capital on the very, very low side is maybe 5 million, and that's on the very low side. A lot of venture capital aren't bothering with that amount of money, so there's a big void there right now in the 5 million, 3 to say 10 million. Most of them are operating in the 10, 20, 30 and on up. And the thinking, what I've been hearing is it takes just as much work for the venture capital people to take a look at a deal of 20 million as it does to take a look at a deal for 5 million. So so there's a big void there right now, and that's what I'm talking about, this void. Any questions on this? Okay, so angel investing. I don't know if you guys are familiar with this. Robert Wilkbank, he's a PhD at Willamette University. is one of the few academics that has actually done research on angel investing. And he did 2 studies that I looked at least, one out of the UK and one out from the US, and canvassing angel investors and groups to see what worked and what didn't work. And there was some very apparent reasons for success. And I bring this up because when we started to form Gopher Angels, it's been almost 2 years, we took a look at this and we tried to find out what is it that are the failure points for angel investing. And this report helps cover that. So, angel investors that collaborate. Collaboration is very critical to success. My wife and I, when we started, we decided after an exit we had with one of our businesses, decided we'd like to get into angel investing. It took about 2 months to realize there were a couple of things missing here. The deal flow, we weren't seeing the deal flow. The other problem was that our dollars wouldn't go that far. You know, to make that, for some it would be, some companies would be just a payroll, and that's as far as it's going to get it. So the other thing though that we found out is the collaboration part. When you're looking at a business and you want to invest in it, your due diligence is critical, and that's another thing that comes up. But combining brain power in a collaborative environment to do due diligence on a deal is critical to the success. And he discovered this in his research. So that's what we're talking about, the collaboration. And I've had personal experience, even before Gopher Angels, with this collaboration. So we were working on a due diligence process and going through our discovery. And the benefit of the collaboration was people were bringing up questions that we were missing, that I didn't think of. And so with this combined brain power, we arrived at a better investment decision. And this has been proved out through this study. Success is directly correlated to the amount of hours devoted to due diligence. So, and his study showed that 40 hours plus, roughly, will lead to a better investment decision in the end and more success. Mind you, this is a very risky thing to do anyway, angel investing. But how do you reduce the risk? And this is what he came up with, some of these things. And there's more. I also want to talk about the conventional wisdom, which is quantity. I don't know if you guys have heard this before, but I'll give you an example. The general conventional thinking is you invest in 15 companies. It's quantity. I mean, you make good decisions, you think they're quality, but here's what's going to happen. You're going to have 5 to 7 that fail, so you lose your money entirely. You're going to have 5 to 7 out of that 15, let's say 5, that will break even. So maybe you get your money back. Then you have another 1 or 2 that might give you a small amount of a return. And then hopefully the other 1 or 2 that are left are home runs. And this is where you make your money. So that's the conventional thinking today on how to do angel investing. And I just met with somebody this week. And so if you take, and this is his philosophy, he's figuring I do the 15, I'm going to have a return of 2.5 times my money out of that 15. Okay, so that's conventional wisdom. But I have a couple of people in our group that kind of buck that conventional wisdom. And what they do is they look very closely. Their due diligence is tremendous. They go into their due diligence with great detail. They take their time. If they don't think it's ready for them, they don't do it. They do tell them to come on back later when you have achieved certain milestones. And so there is no necessarily right way to do it. You have to set your own criteria. Once you set your own criteria, stick to it. Okay? But there's one member in particular. She's been with angel investing since 1997. She makes a living at it. So that says something. And she'll do at the most 2 or 3 a year, if any. So she has her criteria. She goes through that process. So you have conventional wisdom, but then there are some people that kind of buck that trend. So what are the benefits of an angel network? I'm not talking necessarily about a fund, but they both have benefits. But generally, in a network, you control your own investment decisions. For a lot of people, that's really important if you want to be involved. If you just want to pool your money and not be less involved. The fund is a good way to go. But on a network, you're making your own decisions, so you do need to participate. In Angel Network, another benefit is enhanced quality deal flow. This is something we work on all the time, networking to build our deal flow. And the accelerator here is a good example, where we would welcome quality deals out of the accelerator to come to Gopher Angels so we could take a look at it. So we've had Gopher Angels 300, it's been about a year and 9 months, we've had 320 deals come our way. Of those, maybe 30 to 40 would be considered quality. Of those, we invested actually soon to be invested to be 9. So you're looking at about a 3% rate of the deals that come our way that we eventually invest in. One of the things I really like about being in an angel network is the collaboration. It's not only to come to a good investment decision, it's just the gratification of sitting with people and working these things out. It's like a teamwork effort and combining brain power. It's very gratifying, that kind of thing. So you meet some really good people in this business, and they come from all sorts of industries, all sorts of professions. And what we're trying to do to put this, again, we go back to Wilt Bank, is to put a structured process into angel investing. So instead of investing by heart and gut on the golf course with your buddies to say, I know somebody that has this business, what do you think? We're putting structure to it. So there's a process that we follow. And as we've been developing, we're improving that process as we go. So any questions on this part?
Dave, when you talk of the collaborative environment, is that really amongst the investors or collaborating with the companies you choose to invest in?
Well, when we're a little bit of both. When we go through our due diligence process, it's a matter of back and forth, constantly going back with the entrepreneur and back and forth. But generally, we have to rely on our own discovery and the collaborative process. But what we do is we do have staff, we call them staff, that are experts from certain industries that we don't have members to contribute that type of background. So we have staff to go to and say, what do you think of this? Is this viable? So when I get an early, on the collaborative side, so when I get a deal, not all deals, but when I get a deal that I think may have some merit, we have committees. So I'll send that out to our committee for a quick read. Is this a viable business? You're from the industry. Does this even make sense? So, and that's an example of collaboration. I'll go through our process a little bit more so you can see how that works a little bit more in detail. All right. Any other questions, though?
But in terms of when you fund a company, what type of relationship do you have with them? There's sort of a collaboration with them. You guys, what do you provide to the company investing all that money?
Once we invest?
Yes.
It really depends on the amount of dollars we invest. Okay, so out of the 9 that we have invested in, one of those companies we only invested $20,000. So a very minor stake in it. And that 2 guys, the minimum amount, $10,000 each. Then there was a business we invested in that was about $350,000, and that was a considerable portion of what they wanted. And we had someone within our group that had deep industry experience, so they took this fella on as the chairman of the board. Very collaborative. We also want to make sure that these guys succeed. So, and I don't know, maybe that's what you were asking. In that sense, there's collaboration that we want to bring them as much success as possible once we have money into it. Open doors, network forum. We've had some of these companies come back multiple times after we've invested because they continue to look for more money. So as we grow, there are people that have not seen these companies. We also have our members stand up during meetings and give us updates. So that kind of collaboration.
Question?
Yeah.
You talked about the 40 plus hours as kind of being your threshold on due diligence and homework. Is that collective time, or within your network, are you spending 4 hours and he's spending 40 hours and he's spending 40 hours? And because I'm doing the math here in my head. If you've seen 350 deals in the last year and 9 months, Okay, so 30 or 40 of them made it through you thought were quality deals, so you're probably doing 40 hours on each of those. You're up to 1,200 hours for the year. And most of the guys I know in this room have other jobs.
Yeah.
So how are you gonna spend the time doing the due diligence on all of these deals and still trying to feel like you're making a quality investment? So where does that,
There's a
that
flow
work
here.
lay within the network?
There's a flow here, and we may
Okay.
cover it later, but no, now that you have the question that's fresh, let's talk about it now. So there's a flow here. We use a system or a platform called GUST. I don't know if you guys are familiar with it, but it's like a gust of wind, GUST. This is a platform, it's a global platform, but primarily US. And angel groups and venture firms belong to this platform, for which then Gopher Angels has a portal. It's also very useful for entrepreneurs, because then they can find angel groups and venture firms to send their materials to. So the way it works, just to give you a background, a company that is looking for funding will go in and they'll build a company profile on GUST, sort of a tutorial. And that includes a business plan, an executive summary, a financial, they can even do a video. And then when all that's completed, then they share that with, in this case, Gopher Angels. All that documentation goes to our site. Okay, once it's on our site, because a lot of our members are just what you're talking about, they work full time. So it hits our site. I kind of go through there as a managing director, and I look for the ones, number one, they're not Minnesota based unless they're referred in. So we get things from Bulgaria and Ukraine out of that 320, so they're out right away. The other thing, it becomes a bit of a chat room for our group on their leisure time to go in and make comments and ratings. All right? So we haven't invited anybody in yet. So for example, January 16th is our next meeting. January 3rd, we're going to have a pre-screen conference call. I'm on my computer all the time sending emails. Make sure you go in there and do the ratings and comments on this stuff. Because before that pre-screening conference call, I'll go through there and I'll look at all of the ratings and comments. We'll put them in 3 columns. No interest, high interest, and then a middle ground. And so for that January 16th meeting, we're going to pick 3 to 5 companies to come in and present to our group. So out of that 320, a lot of those are gone already. And generally there's between 20 and 30 that we have to pre-screen for each meeting. Okay, so then we're down to 3 to 5, all right, that we've done that work on. So from that 3 to 5 then, what we do is we bring them in, they do a presentation, 15-minute presentation, 10-minute Q&A in front of our group. They leave, we shut the doors, we talk about them. And then I canvass our group inside this meeting and say, who's interested? And you know, some don't want to speak up for whatever reason, so we also have a sheet then that they write their interest level on. And so they're either interested if other angels are going to follow it, or not interested at all. Please give me your comments, because we always get back to our entrepreneurs to say why we're not, or whatever. Okay, so then we've done that process. So out of the 3 to 5, maybe we'll look at 2 to 3 beyond that. So what's next? Then we go through a manager's meeting. A manager's meeting does require about an hour to 2 hours to sit down with the management team of that company to see if we're really interested, because that 15-minute presentation, that pitch, really isn't fair. It's just to set the hook. So then we sit down for an hour and a half to 2 hours. It's after that we decide whether we go into that due diligence process. And about 50% of those companies don't make it past the manager's meeting. So we whittled that down to where then we're in that manner, you know. And what we also do, what we did this last time, it's evolving. This is all evolving. But what we did the last time, we have MBA interns serve as coordinators. So they communicate with our member investors. They arrange meetings, phone conferences, and so forth. It's constant back and forth. Entrepreneur, our members, this guy has a question, we have to go back to them. They have a phone conference, we discuss. That's the 40 hours. But it's managed by, so far, managed by an intern. So the hours are there, but it's been whittled down to maybe 2 companies by the time you're doing it. Yeah.
How do you find the majority of how are the companies finding you, the majority of them?
Well, it's, and that's, has not been a problem so far. I would say deal flow wise, at least from the Twin Cities, because money's scarce, and it's been really tough over the last couple of years for entrepreneurs to find money. When they find out that there is a source of money, it seems to attract like a magnet. But what I do, part of my job is to go out and network. So I'm at a lot of these events where the entrepreneurs are there, introducing myself and handing out business cards and so forth. We sponsored we were one of the sponsors for the Minnesota Cup this last time. So we had some profile there. The previous year we were sponsors of the Clean Tech Open. I don't know if you're familiar with that. So we did that as a sponsorship. So we're getting our name out there to let people know this is where you go. The other thing is we treat them with respect. And I say that because there are other angel groups out there that don't treat them with respect. And now we're finding that we're getting the deals and they're not. So people are coming to us. And we try and do as much as we can to treat them with respect. So this is our mission statement, and because I'm in Rochester here, I want to make sure I underline in bold state of Minnesota. So to build a sustainable organization, which is really on my shoulders right now, to build a sustainable organization of accredited angel investors, and I'll get into what the definition of accredited is, to collaborate on making successful investment decisions benefiting entrepreneurs, the respect that I mentioned, while contributing to business growth and entrepreneurship in the state of Minnesota, not Twin Cities. It's the state of Minnesota. That's our focus. We don't care where these companies are located. We just are looking for successful outcomes. So that's important. If your criteria from Rochester is to help businesses in this area, entrepreneurs in this area, that's your criteria. That's fine. And if they meet your quality criteria, not only can you invest here, but you can grab currently one of our other 50 to join you in an investment here, okay? So that's important. We're not Twin City centric. We're looking statewide. And when I say that, it also means we're also looking at Hutchinson, Owatonna, and Fergus Falls, and Austin. So we're definitely for the state, but I just wanted to make that clear. Any questions? So, Gopher Angels, specifically. A network, not a fund, as I mentioned before. We are very strong on collaboration. This is critical to our success. And I will say, the culture is important here. And if we don't feel like a potential member can contribute to that kind of culture, you don't think it's the right place for it. Okay, so that's important. What I like about this collaboration, what contributes to that, is diversity and industry experience, and we're continuing to look for that. What we're missing right now is agriculture, and we just brought somebody in with consumer packaged goods experience. But right now we're currently strong in healthcare, and we're currently strong in IT, technology, that kind of thing. So we're strong there right now, and then my background is clean tech. So we're kind of covered there, but where we aren't covered very well is in the ag side. Okay. So we welcome that industry experience. And then diversity in professional disciplines. We have attorneys, we have people from the finance side, people from the marketing side, we have CEOs, CFOs, that kind of thing. So it all contributes, again, that collaboration to a successful investment decision because you're getting the brain power of a diverse group of people. We are continuing to, and then we have our processes and procedures, which we've built, and we want to follow. But you know what? We're continuing to evolve. So right now, for example, I'm doing a lot of this work. We also have our interns doing a lot of this work. Our next evolution is to hire an executive director, hopefully by March, part-time at this stage because of the size we are, to manage the due diligence process more professionally, rather than having the intern do it. Also to take a look at the term sheets, to look for red flags before we invest in a deal. We want to make sure that the terms are at least beneficial, a win-win for both parties. So, okay, our first presentation meeting, as I mentioned, was March 1st, 2012. We had 8 members. So today we're at 50. Our group has invested 1.2, 1.3 million, I would say, in the last year, but we're also just we get the documents tomorrow for another deal, our biggest deal of another 1.2 million. So we're going to be at about 2.5 million. That's not bad for a network. And we'll have invested in 9 companies. One of them is not from Minnesota, it's from San Diego. But that company has a contract manufacturer in Litchfield. So they have that connection. We are reaching out state. As I mentioned, we've got the Clean Tech Open and Minnesota Cup. Our strengths, we have no exits yet, so I can't claim any successes. It's only been a year. And I kind of mentioned our process already, so I don't think I'll have to go through that again. I'll just skip over that. But one thing, and you might want to go back and take a look at, this is important, is GUST.com. Just take a look at it. You can actually access that without having to pay anything. And if you go up in the right, see, the top left corner, you can click on Browse Investor. You can click on Browse, I forget the term, it's like the entrepreneur. So you can look at this whole global network of angel investors and venture firms. And you can also look at the entrepreneurs and what they've come. And you can filter through industry. So if you have an industry interest, you can take a look at what's going on. Okay, GA member requirements. You have to be an accredited investor, and again, I'll get into that in another slide. But then with the Jobs Act, previously you could just check a little box and say I'm an accredited investor. Now, and we've been doing this anyway, but we ask for a letter primarily from your CPA, but an attorney, wealth management firm, something like that, to actually confirm they are. And the Jobs Act is requiring that be updated every 90 days. Yeah. Otherwise, you have to give me all your financials and income tax records, which doesn't go very well. So this is how we get by with that. It's legal, but we have to, we go third party. We ask a commitment to invest $50,000 within 2 years, and that's any increments, any businesses you choose. Okay, $50,000 within 2 years. Why do we do that? Remember I told you originally that we looked at failure points for angel groups. One of those is they become a social network and not an investing network. So we asked for that commitment to join, to come in with $50,000. So far it's not been an issue at all. We have a membership agreement. Essentially all that is to relieve us of any liability for your decisions as an individual investor. And a collaborative culture, which I mentioned before. So, are you guys familiar with the Minnesota Angel Tax Credit? I'm going to spend just a little bit of time.
One question on
Yes.
your group, I mean, there's no paid positions, it's
Oh,
all volunteer?
It's all volunteer now.
Okay.
This executive secretary or executive director will be coming in, we hope, within the next 3 months. But the other thing, there is a fee to join, which I wish I could put in. It's $950. That's an annual, and that helps cover our expenses. Right now, it's all volunteer. So, for investors, it provides a 25% individual income tax credit for qualified investors. So you have to be an accredited investor, and I'll get into the definition of that in a little bit. It's totally refundable. You do not have to be a Minnesota resident to get this credit, okay? And here are your maximums. It's $125,000 for the individual. I don't know if you can see this. $250,000 for a couple. For businesses to qualify, because both parties have to qualify. You have to be a Minnesota business headquartered, and you can see the rest of this. Not in operation more than 10 years, certified by deed, and you have to be you can go look, but you have to be engaged in a business that has a certain technology that the state's trying to promote. So, 2014 is the last year this is funded, and it's going to be $12.4 million. This coming year, $400,000 came from it actually closed in May, but what happens is some of the deals don't go through. So there's an extra $400,000 coming through. So it's going to be $12.4 million that will be available. And last year, I think it ended in May, and this year, the word is it's probably going to be gone as early as April. So it's going pretty fast. and it's the last year. We are working hard as an organization and working with others to try and get this thing extended and maybe even funded with more dollars.
I think there's a good chance of that.
Yeah, there's a lot of
Based on-
activity.
Yeah, I think there's a really strong chance of that program. It's been a good program.
It has been. And it's attracting money from outside of
Bringing
Minnesota.
capital into the state.
Bringing capital in from the state, not only,
So you have 12.4 million available for businesses to?
it goes to the investor. So if I invest $100,000 into a business,
Okay,
and that business is qualified for this, and you as an investor are qualified for this, you receive a $25,000 credit, tax credit,
okay, I got you.
okay? So, accredited investor today, according to SEC rules, so who's an accredited investor? An individual net worth or joint net worth with your spouse exceeds $1 million, not including the value of your primary residence. $1 million. Or natural persons with incomes exceeding or 200,000, and you can see each of the 2 most recent years, and you're expecting, I don't know, I think I'm going to get that again in the 3rd year, but that's what they say. So that's how it is. And then there's, I mentioned the Jobs Act, which is changing a lot of this, and that's a whole other meeting, so I won't go through that. But if you have an opportunity to look up the Jobs Act, there's a lot of interesting things coming through on the Jobs Act, crowdfunding, and some other things that are affecting angel investing and entrepreneurs. This guy is amazing, Jeff Nelson. If you want more information, you go on the website, you call him. It's one of those few government agencies, the guy is like right on it. I sent my thing in to be approved as an investor, got it back in 10 days.
Now, what was the fee for that? You had to-
Oof. What was the fee? It's not very high, it's like a couple $100
Yeah.
or less. So it's not very high, but they're very quick. And if you have questions, go to him and he'll answer them. So he's very, very responsive. Couldn't ask for a better person to be in this deed office. And that's me. So Gopher Angels, here's our website. Feel free to contact me. I mean, I'm right here if you have questions, but so anything. I didn't want to put you to sleep, so. Yes?
Can you provide names of some of the companies you've invested in?
Yeah, the one we're currently looking at, if it goes through, is Perceptus. They were the Minnesota Cup winner this year, and so they're going to be receiving about, 2/3 of the money they were looking for from us, which is, pat ourselves on the back on that one. That's one of them. Another one on the small side was Bavia. That was the $20,000 one. They do massage therapy in hospitals to try and improve the patient experience so they get a better rating, kind of thing. So that's one of them.
Fee's $350.
What's that?
$350.
$350. Okay. What else is there? Give me a sec. One of them was an LED lighting company, actual manufacturer, not just a distributor, but they do commercial replacement of fluorescent lights. And they actually manufactured in China. They have a really good technology. I mean, the technology across the board is somewhat similar when it comes to LED lighting, but they had a good management team, so we invested some money there. And that was one of the first, we also co-invest with other groups. I didn't cover this, but we're connected in Nebraska with the Nebraska Angels. We're connected with the Plains Angels in Iowa, Des Moines. We just recently connected with the Wisconsin Angels. We share deal flow. Chicago, there's Grand Angels in Michigan. So the idea here is to bring more money into Minnesota, but we also have to reciprocate. So the one exception about Minnesota businesses, in order to reciprocate, we will look at their deals that they've invested and they're looking for more money. But to answer your question, one more. So there was LED, Pursuit Vascular is the company where we have one of our members join the board as chairman of the board. So that was one of them. Lumina was the LED company.
What did the
else
first
is
company do? The one that you're possibly investing in?
Yeah, now I'm not on the medical side, so if I describe this incorrectly, forgive me. So the idea here is that it's for children that need ear tubes. And what they do is they have a device that can place the ear tubes in there in a matter of seconds without any anesthesia. So it looked very promising, and a good management team. And for us, we always, the word, you're in real estate, so it's location, location, location. At least that's what they say. So in the angel investing world, or any investing world, it's the team, the team, the team. So they had a good team. Every one of these groups that we looked at had a good team. That was the foundation of our investment. And then from there, we look at the concepts and the viability of it all. Yes?
Like 15 questions, but I will ask only 3. It's okay.
Okay.
So one, can companies have incorporated in Delaware and then still have the offices or headquarters in Minnesota and still qualify?
For Gopher Angels?
Yeah.
Yes.
Okay, that's one question. Second, so how do you invest? So for example, you ask them a certain number of shares or you assess their value, what exactly they give in exchange and what's the exit, how everybody exit from it, and when do you say I'm happy? That's like I understand that one is home run on this, that you are actually getting shares forever. No, I mean, I'm sorry, I just don't know what's the exchange. So people come to you and say, okay, I need $300,000 or so, and then how do you proceed from that?
Yeah, and that's a good question, because it's all over the board. So what we're looking at I've seen preferred stock offering. So you're up there on a preferred stock basis. I've seen common stock only. I've seen convertible notes, which can convert to stock at a later date. All over the board
So they need to be a C Corp with shares.
for some of these,
Okay.
okay?
If no, you would have them to convert their LLC to a C Corp or something,
Well, there's
or S Corp.
yes. Okay. And as far as, it's all negotiable, the terms. We didn't negotiate the $20,000 because we didn't have any leverage with the $20,000 into this company. With the $1.2 million that we're coming in with this other company, we do have some leverage. So we're taking a look at the terms, which we'll be getting tomorrow, to see what we can do maybe to improve our position. But really, from our point of view, it's got to be a win-win. We're not out there to cram down these companies. We just want them to win. So that's one thing that's a little bit different than what you would find from a venture capital firm. We're not out there to screw anybody, all right? So we will negotiate, try and get a better position, but it's got to be a win-win.
But usually you don't get 51% of
No, I haven't seen 51%.
Okay, so I have some other questions like, do you require people to have an enterprise resource planning so you can see moment by moment or overall how the business goes? Since I understand you're not going to babysit like every single step, but do you require them to have a system to be able, so you can monitor overall the activity?
Yeah, and that's a good question too, because the question was, how do we monitor the success of these businesses? I mentioned the executive director we want to hire by March. This is one of our improvements. So now, we've invested in 9 in the last 12 months. The only way we've been tracking these 9 is that we've had our investors stand up in a meeting and say, this is where they currently are. That's not the best way to go. So this executive director will then be on these guys for quarterly reports and to shake them up and make sure that we get that information in so we can track these companies, because we need to do that now.
So it would be, okay, so maybe you can invest in a small entrepreneur who provide the enterprise resource planning for any of your investments to some extent. So it's a tool, understand?
Well, once you get the investors, you have to ramp up your reporting requirements. You have to. I'm not going to invest in a company that doesn't have the ability to tell me how well they're doing. If they can't do that, then you don't want to invest in them. If they can't track their money, then there's a problem there already. Any other? Yeah.
For someone thinking about investing in your group or in an angel position, and I know you guys don't have access, but what's the industry average of the upside of someone investing in an angel?
As far as the individual?
Returns.
Well, that was a number
What
that.
can one person expect?
Well, if you take this approach of volume out of the 15, the number I heard is you get it 2 to 3 times your money back. 2 to 3x.
Within what time frame?
Well, that's another issue. I mean, it depends on It can be 3, 5, and the one woman I spoke to you about that's been doing this since 1997, I wish she could have been here because she could give you a deeper background than I can. But she still has companies out there that have not given her a return yet. So that's, a lot of years. On the other hand, she hit a couple of huge home runs because she's very good at what she does. She's well beyond that 2.5 and makes a living at it and turns it over into other investments. So she's a bit different than the volume person. She just takes such a close look at each investment and has her own criteria, and she sticks to that criteria. I've been on some due diligence efforts with her, and it was quite the learning experience how she dives into this. She can come back when we have companies that will change their name and then come back 5 years later, and she'll pull out a file and say, oh yeah, I talked to these guys 5 years ago. They were supposed to be at 145 million by now, and they're still no revenue. She's tremendous. And that's an example of some of our veteran investors that we have access to.
Now, are you going as dilutable stock, non-dilutable, is it both? For the follow-on investment, how do you structure those?
Well, that's one of the big risk factors is the fact that as an early investor, you're diluted out. So your value, if you bought in at $2, the next guy comes in and he's going to offer your entrepreneur $20 million to make it, the big company, and they're saying, well, your stock is really only worth $1. Well, you just lost a big portion of your investment. That's part of the risk. Now, how do you handle that? Ideally, what you do is when and you mentioned term sheets and so forth, ideally what we do, and what we're doing tomorrow, is to look for red flags. How do we protect ourselves by putting in language into these agreements for anti-dilution? So if there's a dilution effect there, we get more stock to cover that reduced value, for example, and some other things. I'm not an expert at that, but that's a huge risk factor. For me, my criteria, I'd like to see a company personally. Okay, we're not going to make the big returns. I'd like to see a company that goes into positive cash flow that can grow organically. And that's what I like to see. Other people want to see, the big return. I won't see the big return if I'm investing like I just described.
That's how you built your business prior.
Yes, exactly.
But your results have to be kind of quick. You invest, let's say, $200,000 and you want the results on December next year. That's quick turnover.
That's pretty rare.
Okay. So it's longer. You are not expecting them to perform as soon.
No.
Okay.
I will say the one we're looking at now is, again, and then this is rare, and they're going to, God bless the entrepreneur, but they wouldn't be doing what they're doing if they weren't optimistic about what they're doing, right?
Just tell us it's like 0.1% success rate, so
Yes.
pretty bad.
It's so, what they're telling, in this particular case, they're looking, and there's a high probability, but no guarantee, of course, that they're looking at an acquisition later in 2014. That's rare, though. I haven't seen that happen. My business that we did, that someone came in and acquired my business, that took, so we started in about 3.5 years. That was unusual, too. Generally, you're looking at earliest 3, you're probably looking at more like 5 to 7. And depending if you're going into medical devices, you're looking at 7 to 15. But your returns could be huge there if it's successful.
Are any of your members funds, and could you compare and contrast a little bit, networks versus funds?
Yeah, actually, we have members that are operating funds. We have small venture firms in our group, and we also have individuals. So the venture firms, we have one family fund, small family fund. And so they're probably sitting on, they don't share this with me, but they're probably sitting on somewhere either side of 10 million, maybe up to 20. And what they're doing, what we're seeing is they're investing bigger dollars in these deals. So 750,000 in a deal versus a lot of our individual investors are investing maybe 50,000, 150,000 at the most. Does that kind of answer your question?
Well, and then could you compare the risks and differences between an angel network and a fund?
Well, I think really they're very similar in the sense that yes, there's collaborative effort in a fund as there is in our network. But you might find, what I don't like about it, and why I'm in a network, is you might find majority rule telling you that you have to invest in this particular business that you don't think has legs. That's the disadvantage. But those funds can be just as successful as a network, so I'm not going to disparage the fund. It's a matter of your personal taste, really. Any other questions? Yes.
So, you said your group has like 50 people. I'm a company, I'm coming and asking for money, I have an idea, I have a thing. You have to convince all your 50 members to get even $15,000 investment from your group, or I have to just convince one of your member who's willing to invest $15,000 in our company?
No, it's a good question. You know why? The question of how many of our members have to pony up, essentially, right? So it can be it could be one, it can be all 50. I haven't seen all 50, but I have seen about 15 of our members band together. The way that works is, I was mentioning to you, after a meeting, what we do is we put together an interest group. That's that interest group. It could be a group of 1, 2, 4, 5, or it can be an interest group of 15 to 20. They're the ones then that move ahead with this company to the next, process, which is the managers meeting. So they sit at that managers meeting. Let's say it was 15. Well, 5 decided after that managers meeting they didn't like it. 10 move on. They go into the due diligence process. Now we do tell the whole group, the entire membership. We inform them as this is occurring. So if somebody wants to jump in, they can. But it could be one guy. Early on, I had one company who ended up, they're looking really good right now. And they said, would your group be interested in what we have? I said, no. Big mistake, because we have 50 people. I can't determine if one guy who ended up investing in this company would be interested. So I no longer say, no one's going to be interested in this. Bring it all on, because there might be one guy that can write a big check for you.
That's one of the differences between the network and a fund.
Yes.
You're making individual decisions.
Right. So it's a bit different. Okay.
Your members have to be active in terms of willing to do the due diligence of things, or can somebody just be a passive investor?
Well, for a network to work, you should be participating. Now, that's an advantage of a fund. You can write the check and let everybody else do the work. So we do look for some participation, and that's part of the collaboration. To collaborate, you have to participate. And so let's say you have an expertise in, I don't know, your industry, for example. It'd be nice if we're going through the due diligence process, even if you're not involved in this particular business, you have no interest in it for whatever reason, but you're available for someone to call you up and say, what do you think of this? So we'd like to see that involvement. Eventually, we are going to have, and there's no timetable on this, so I can't tell you if it's 6 months or 2 years, we are going to have a sidecar fund for people that want to invest but not participate in the due diligence process. So you can park your money in the sidecar fund. Sidecar fund means, as an example only, it might be $500,000 in the fund. If we have a criteria, 3 investors minimum, at $150,000 minimum, the sidecar, they go through all that and they decide to invest, the sidecar fund then will say, we'll match that $150,000. They didn't do the work, the due diligence, but they come alongside this $150,000, which ends up then being $300,000. That's just an example. It could be a percentage of the investment or whatever, but that's an example.
Can somebody represent that member at all? Or does the member absolutely have to be the individual there? Simple example, if they're not available for the meeting, can someone go in and represent them?
We don't allow that because they have to be an accredited investor to participate in the actual investment within our group. And so we haven't brought in I don't know what you would term that, but we haven't, do that. Yeah. Like a surrogate.
Back one slide where Jeff tells you this information.
Do you want me to bring that back?
Yeah.
Sure. Carry on.
Question on the tax credits. You agree when you sign up to make a $50,000 investment But that may go over the course of, what'd you say, 2 years?
Now, difference, tax credit is from the state, there's no requirement minimum there.
I understand.
For
but
Gopher Angels, yes,
To be in the network.
yes.
So presumably you'd be eligible for 25% tax credit. But that investment would have to be made before the 12.7 million got exhausted. Is that
Yes.
right?
And there are a couple, when presumably, if the business you're investing in qualifies, you should qualify because you're an accredited investor or you wouldn't be in Gopher Angels. So you have to meet a couple of criteria there. And again, the money ran out in May last year and they're saying April this year. It's a nice incentive. Really shouldn't determine whether you're going to invest or not, but it's a nice incentive.
Yeah, yeah. 25, your $100 investment costs you 75.
Yes, a nice incentive, but
Right up the front, so you covered $25 of loss right up the front,
Yeah.
with the credit.
no, it's a good motivator. And I've seen some of our investors, some of our group, boy, the activity before they see that money disappearing really ramps up.
Well, there was actually a bill in the legislature last session because some legislators feel there's not enough of the credit going to outstate. Most of the credits are happening up in the Twin Cities area. That there's actually a bill put forth to increase the tax credit outside the Southern County metro area to 40%.
Mhm.
And I don't think that's good state policy. It ought to be the same all over the states. More a function of, where the entrepreneurs and where the deals are than it is the availability of the money. But that could very well pop its up, and certainly if it passes, it's some people's advantage outstate Minnesota. So
Would be.
yeah, so
But they still have to be
that'd
quality
a fairly
deals.
significant deal. So I'm fairly positive that the legislature will reauthorize. To what extent, I don't know. I think it could probably go, but it's been successful. And they've done the work in the research, and it's been a good program. It's brought capital into the state. And it's really about bringing capital in. Replace anything.
Yes.
What are the 5 most common causes of failure for small companies when people invest in, like angels? I understand that you didn't fail yet.
Yeah. For the entrepreneur, I think we have a professor here in entrepreneurship, so maybe he can answer this as well. But I think a lot of it, personally, because I don't have a research thing on this, but I really do think a lot depends on the team. And if it's not the team and the management, then it's the board of advisors they put behind them. People that, if they don't have certain expertise, whether it's, they're weak in finance, weak in marketing, weak in technology, industry in general, for people to open the doors for them. So the team and the people behind the team, the board, that's critical. Because you can have a mediocre business and have a tremendous success if you have a good team. But if you have a bad team and a great idea, I've seen them just bury it.
So as I see that you mentioned 4 kind of domains of expertise which needs to be there in order to be successful and not to fail. Did I get it right? So
Well-
you were saying accounting, technology, what else was there?
Well, it depends on the business. I mean, I just mentioned those as an aside, that if you want to build up a good business, you need some of the basics there. If you don't have the skills, go find the skills. If you don't have the network or the connections to make this successful, go find those skills. I think the worst entrepreneur that I've seen is the guy that stands up and gives us his pitch, and when we ask him questions, it's like having a chip on the shoulder, like, I don't want to hear anything from you. What kind of entrepreneur does not want to get advice on how to do it better, right? So, see ya, we don't do anything with them. And that's one of the big things. It goes back to the team again. And of course, you have to have the concept. Now, when we go through our due diligence process, one of the things we discover is they don't understand the business. I don't care who's on the team. They don't know what's going on out there. They don't know that there's a competitor that's already servicing that business, and they just were funded with $15 million when these guys are looking for $200,000. So they don't know what's happening in their own industry. So that's frightening, that kind of thing. I don't,
Yes.
sure there are other things, but. Okay. Is there anything else I can answer for you? All right, well, thank you very much.